everyone. This is Kimberly Mashek here, your trusted mortgage expert. And I am here in Colorado today, but I'm not just licensed in Colorado. I'm also Texas, Florida, and soon to be Wyoming. So if you have a need, hit me up. Today I'm going to talk about something that's on every homebuyer's mind, and that is mortgage interest rates today. If you're a first-time homebuyer especially, this is important for you to hear. We'll cover what's happening with current mortgage rates, how they affect your buying power, and also some insider tips basically to help you secure the best possible deal. So grab a pen and paper because you're going to want to take notes. All right, what I have up here is mortgage rates, what they look like today, kind of what they've looked like historically. As you can see, they've been at this point that we're at actually even higher before, back in 2000. They did definitely drop, and as we know, in 2013 there was a spike down, but definitely during this COVID time, we all know that they were spectacular, and that's what a lot of people are used to. However, they're hovering around 7% right now, and that's at par. Basically what at par means is you're not paying anything or very little to obtain that mortgage rate. So at 7%, you're not going to be putting in any additional money or very little additional money to get that rate. That's something that kind of can confuse people. But you might notice that conditions like housing demand can slightly impact what lenders offer. A mortgage broker like myself can shop out these deals for you. So we're not stuck to just one rate sheet. I can shop around and kind of see who's offering the best to get you the best deal. For first-time homebuyers, mortgage rates can seem a little overwhelming, but here's the thing. Even a small difference in interest rate can greatly affect your monthly payment. And over the lifetime of the loan, that can add up to thousands of dollars. So understanding these numbers is super important. Here is a little bit of a breakdown here. Let's just compare, for example, 7%, kind of what we were just talking about, versus your 6%. So if it happens to drop a whole percentage point, as you can see here, it's not quite $200 in savings, but that can be huge. I mean, you're saving $200 a month. $200 a month can average up over time to thousands within a couple of years even. So keep that in mind. The higher the interest rate each month, the more of a home you can afford when it goes down. So like if you get pre-approved at the 7%, rates drop, make sure that you reach out to me or whoever you're speaking with to see kind of what your new pre-approval is, because it very well may increase significantly. So how can I get the best mortgage rate? All right. I'm going to give you a little insider scoop, especially for first-time homebuyers who have never been through this before. You can boost your credit. The higher the credit score you have, the better rate that a lender is willing to give you. There are a bunch of reasons around that, but we can discuss that a little bit further when we have our conversation. You want to shop around for the best programs and rates. Don't just settle for one option. If you, for example, come to me thinking that you want a conventional loan, well, maybe an FHA loan is going to be a better option for you because of your credit score or because of your debt to income ratio, which I can get into at another time on what that actually means. I'll always shop out the needs for you that best suits what your situation is. We also have different terms. So maybe you're not a first-time homebuyer and you're very familiar with a 30-year term, but you don't want a 30-year term this time around. You've got extra money. You can afford to spend a little more on your monthly payment, but you want it paid off sooner. We can look at a 15-year term. We can look at a 20-year term. There's a bunch of options in between there that we can look at for you. There's also special programs for first-time homebuyers, as well as VA, veterans, 0% down options. There's just a ton of options. There's options for self-employed that honestly, as a non-QM loan for a self-employed person, you can get rates that are very similar to the conventional rates that we were just looking at over here. So keep that in mind. I want to jump in next for the actual market. So everybody asks, is it a good time to buy? And I'm not just saying this because I'm in the industry. I'm saying it because of reasons such as the purchase prices of homes. Look how significantly they've raised. In 2013, you could get a house around $200,000, where now the average is up to $600,000 in Colorado alone. I'm just speaking of Colorado at this particular point in time. because that's where I reside, but it has gone up everywhere, I'm sure. Maybe not to this degree, but $600,000 median. So if you continue to wait, I mean, this is from 2023. It did come down a little bit, as you can see here, but not significantly enough to justify, in my mind, waiting and holding off for the right time when you think those rates are going to come down to where you're comfortable with. I mean, obviously, yes, you need to be able to afford the home, but anyway, I'm getting off track. We do have some down payment assistance programs such as CHAPA here in Colorado that can help a first-time home buyer get into a home. We just have to stay within the county's loan limit parameters, which at this point they still would be. So there's no issue there. But fact of the matter is, the longer you wait, the higher the purchase prices are going to be. You're also going to be fighting for with others, I guess, say, as a bidding war, as we call it. So where a house may be listed for $400,000, you may offer $400,000, but 200 other people want it too, and they keep jacking that price up. So that can sometimes push you out of being able to get into that home. So keep that in mind. I mean, in my mind, the time is ticking, right? We always have a saying in this industry: marry the house, date the rate. The rates come down, we can always refinance you out of it. Timing is everything. So I understand that rates are important, but the monthly payment is the most important. So if we can get you into one that you qualify for, I would say let's do it. Don't hold off. All right. So I hope this gave you a clearer picture of today's mortgage rates and how to approach the home buying process. If you're a first-time home buyer, especially, remember, you don't have to navigate this alone. If you have any questions, you need any personalized advice, feel free to reach out to me. I'm here to help you and help make your home buying journey as smoothly as possible. If you found this video helpful, please give me a thumbs up. And don't forget to subscribe to any channel, mine or others, for home buying and mortgage, so you are better educated for when that time comes. Thank you for watching, and I will see you in the next video.